some of the setups that were there, and I was just looking at this gold chart as I kind of pulled it up. So gold actually has a couple of the concepts we like just recently talked about not too long ago. So we'll definitely look at how this gold chart is setting up and kind of doing some technical analysis, kind of picking it apart. Let's move this out the way. Okay. Yep. What's your question? We'll do questions first, as always. On what pair? Okay, cool. Let me draw it out on here. Okay. And get rid of this. All right, so give me your numbers. $1.17661. Okay. Give me that one more time. 1.176. Okay. Nah. What time frame are you looking at it on? Was it this 1 hour one I'm looking at? Let me pull this over here real quick, see if that looks familiar. Okay. Euro USD, Euro USD, Euro USD. Okay, I see here on the 1 hour. So this was December 7th. Okay, I think this, so setting up for December 7th here. Let's see. And December 7th. Okay, hold on. All right, let me pull this back over here. Let you see what I'm looking at. All right, so I'm looking at the scanner Euro USD for the 1 hour, and the entry for it says 117.28. And if you got in at 117.65, you're about 40 pips late getting in it. So let me see here. Okay. Yeah, I wish you could go back and look at archive data if it shows it up here. All right, but we'll look at those numbers. So if it was this. Okay. Let me stop screen sharing. Maybe that'll help you. If you want to do a screen share, you can. Okay. Yeah, your chart looks funky. What is going on with that? Open open a new Euro USD. You can leave that one open, but open a new chart and see if it'll okay, that looks better. Okay. And entry. Okay, scroll to the right for me. Because your entry was on December 7th, right? Okay, so if you put in a pending order and it did, I'm still trying to understand it, the whole scenario. Okay. Okay, it was one of two things. Either the stop loss and the entry you're trying to get in were too close for the position size. So let's say that's only 1 pip spread. Like let's say you wanted to take a one standard lot, and one standard lot is a $10, a pip position. If your account can't hold that much, then that would be a reason why you can't get in. If the market's moving real quick and you try to go and buy or sell, that could be a reason. If you're trying to do it between the hours of 5 p.m. and 6 p.m., that could be a reason because the market kind of recycles itself. Mm-hmm. Yeah, if you're setting those long-term pending orders, you'll be okay. If you're trying to trade, especially between 5 and 6, then the market is resetting itself and you won't let you place orders because the brokers are kind of resetting their numbers for the end of day. The market's still open, but you really can't trade during that time. Hmm. Yeah, but probably not. If it already moved past that entry point, I try to wait for that retest of it. If it moves too far, but you have like a confirmation pattern, you can still get in later. You just got to remember that stop loss is, you're increasing your stop loss risk at that point by getting in later if it's too far later. Um, okay. Hmm. So did it actually show today's at all? Okay, yeah, because I'm seeing two additional patterns. Uh, Right. Okay. Let me pull up it on my other traders way to see how many are showing there. Yeah, traders way are showing both. Yeah, that's definitely not something you're doing wrong. It's just talking to this server now. I don't know why you're not having the same information come up. That's weird. Because I just do see 2 extra patterns that you're not seeing. Now if I go, what is up with the scanner? Okay, I just closed mine and reopened it. Now I don't see the gold setup that was there like 2 seconds ago. So my first one is showing GBP NZD JFX demo 03. And then daily. So I'm still showing 2 additional patterns. Mm-hmm. Yeah, the only time a pattern will go away is if price extends beyond the actual pattern. So if it shows up there and then all of a sudden the market has a big move or something, like Friday was non-farm payrolls. So if the market has a big move that pattern doesn't exist anymore, it will go away. Doesn't really explain why. I'm saying on my Trader's Way broker, I'm seeing gold and GBP NZD. Gold's on a daily chart, GBP NZD's on a 4-hour chart, and then I see JPY or GBP JPY like Euro AUD. Then I see everything else is the same. So it's missing like 2 patterns. And then if I come over to JAFX, I'm still seeing 2 additional patterns, but they're different. It's GBP NZD on the 4-hour and GBP NZD on the 1-hour. So that's what I don't understand why. On the same broker, there should be the same patterns the whole time. 48 seconds, 9 seconds. Let me take a screenshot of yours real quick, and I'm going to ask the guys in the chat to see if they're seeing the same thing. Okay, that one. Save. JFX and Trader's Way. All right, when we get off here, I'm going to send these in the chat, see if anybody else is saying the same thing. Yeah, that's the best way to do it. Okay. Okay. All right. Let's, so we'll take a look at this gold one, even though it's not on yours. We'll kind of go through it here. That over here. And share. Okay. So this is a nice little setup that's happening, but it'll kind of go through some different things that we've kind of talked about in the past and how to kind of put all the stuff together. So this is the daily chart of gold. So looking at a Gartley pattern that's setting up on the scanner. So the entry point here is 1237.45 with a stop loss right at 1200. So it's 37 points here for the entry. So what I kind of like to do is take the scanner, see what it's giving me, and then I'll mark it up and do my own analysis on it. So 1237.45 is their entry. So let's bring up gold. I like to mark my charts up a lot more in Thinkorswim, just because I got some extra little tools on here. And let me go out to the daily chart of gold. So daily chart of gold, we've had higher highs and higher lows with nice little uptrend, pullback, uptrend, pullback, uptrend, pullback, uptrend. So we've created these higher highs. So I'm going to continue to look for the higher highs, the pullbacks in the market. So their entry point on the scanner is at 1237.45, and I'll keep that as yellow and kind of change this to dotted so we can tell the difference. So that's their entry point on the scanner. So what I like to do, my favorite tool is Fibonacci tool. So Fibonacci, I'm looking for the last major swing up or swing down. And since I'm biased because we're in an obvious uptrend with the higher highs and higher lows, I'm looking for a continuation in the uptrend. So what I want to do is draw my Fibonacci tool, grab my Fibonacci, and draw it from the lowest low, which is actually my blue little dot down here, up to the highest high. And then I'm going to start looking for those entry prices. That first one is 23.6. I just take it off automatically. 38.2, we've already passed it. 50, we've already passed it. And then if we kind of zoom in here, we stalled at 61.8. If I would have got in at 61.8, and I would have had my stop loss just below that, I probably got stopped out if it was too close. And then our next entry here is 78.6, which just so happens to line up with actual Fibonacci. So even if I didn't have the scanner, I still could have just used Fibonacci to kind of get in at this particular level. So let me go down to this 4-hour chart. So scanner is telling us 1237. My Fibonacci ratio on my daily is also giving me that same entry, 1237. So I have two major reasons to get in at 1237. And then if I wanted to have my stop loss, if I use the next Fibonacci level, which is just the 100% retracement, all the way double bottom is at 1203, 1200, right below it would be a nice little stop loss level. Going down to the 4-hour, well, let me stay on the daily chart real quick. RSI down here is way oversold too. So we're at 28, so we're below that 30 threshold. So we're kind of just looking for the market to continue to push down here before we get into this trade. So going down to the 4-hour and then zooming in on it. Let's see here. Let me go down to the 1-hour so I can see something on the 1-hour I kind of like there. All right, so the 1-hour, we had this low, and then we had some bullish momentum kind of pushing here, but we broke down below that as well. So I'm still waiting for this to kind of keep coming on down. So I'm not going to be too aggressive on this, waiting for the actual entry on the scanner lines up with a Fibonacci ratio. So I'm still going to wait for this thing to get all the way to the 1237. I typically do not like sell into certain levels. So if I think it's going to go down to 1237, I don't sell it in anticipation of going it down here. I really just wait for the buy opportunity. Some people like to sell it, you know, if they're anticipating it to reach a certain level. I don't. If you do that way, you definitely want to make sure you know your stop loss is above your last major high level. So your stop loss would be like 1256 in case it pushed back up too soon. So I'm more patient when I'm using Fibonacci, waiting until it kind of gets down to that level. That's about it for that particular one. So that's gold 1237 entry. I've got 2 indicators to kind of get in on that. Yep, I'll put I would put it in a pending order on this one. Gold is one of those ones where I kind of like to be in front of it when I see it because it moves. It moves a lot when it does want to move. You can see that the last hourly it's been kind of slow all the way across. Well, I expect some type of big little bounce off of here. So once I see that big bounce, I like to put my stop loss relatively close on here on gold and kind of take those profits quicker than I do the regular pairs. Or because 1237 to 1200 is too much of a risk for me. I don't want to take too small position size or something like that. And then let me go back out here to the 4 hour, kind of show you another little trick I do. I like to look back because what happens at the 78.6 level, if it breaks the 78.6 level, it's going all the way down to 100. So I don't want to have the entire risk on from 78 to 100 because more times than not, if it breaks 78.6 hard and I put in that pending order and I'm not able to see it, it's going to go down. So what I like to do is like all the way back to the left where I kind of started at. And so I kind of zoom in back on this area. And I like to see if I can find a resistance level, a hard resistance level in here. And so right here in this area, and I'll zoom in a little bit tighter here. Kind of make this bigger. So this is kind of going all the way back to the left where the beginning of this trend started. When I see some resistance, market tried to push up here and it failed twice. Pushed up again, it failed again at this little red level. And then we had some support right here. This was going to be my stop loss when it comes to getting in at that 28.6 level. So this is right at the 12.15 mark. So I've saved myself from 12.03 up to 12.15 just in case I'm wrong. And that'll be my stop loss area, hoping that this area will continue to hold support as we approach it. So let me scroll back. So really now I can take my risk. I hate editing these things. Blocks. Okay. So I'll take my risk now from 1237 and I'll just take it to the 1215 area. So I save myself 15 points of risk right there as the market's starting to pull down. There we go. So now that's my risk. So I take what the scanner gave me. Their risk goes down to 1200, trying to get that down as much as possible to take this trade. So I'm looking to get in at 1237 with a stop loss just below this 1215 level. So probably like 1210 and then look to take it higher. So I'll edit that. So I kind of leave all my drawings on here too. Yes, let me see if I can find a setup that's kind of doing something like that. And let's see if I can find a setup. If I see a pattern that's happening on both sides, or if I see a pattern that could go either way, then I'll typically look for both setups, especially if there's a news catalyst getting ready to come out. Let's see. Let's look at your USD. That's a good question. Let's look at the daily. CAD USD. Clear all my charts. Okay, let me see where the fibs line up on this. See if this is. Okay, this is not the best example of it, but kind of. So if I'm looking at this real quick, my bias is to draw the fib because I see a nice bullish move up and then we're pulling back to the 78.6 level. So I will look to get in on the buy side. So that part is the same setup as gold. But if I'm looking at, because some people use moving averages a lot, the person that's looking at moving averages is going to look for the sell side because we're below the moving average. So anytime you're below the moving averages, you're kind of looking for sell signals as this thing continues to ride below it. And then if you're above the moving average, you tend to look for buy signals. So if I'm biased on one direction or another, I'll go with that direction first. So if I'm looking to buy, I'm buying off the 786 with a stop loss just below it. But if I'm a heavy analysis using moving averages, then I'm looking for a sell, and my sell would be here with a stop above my last high, which is this candlestick back here. So if there's a news event coming out, I'll typically do one of these kind of setups because I know the market will push hard in one direction or another, and there might not be enough of an indication which way it'll go because that news, when the news comes out, we don't know what the news number is going to be. So we're just using strictly technical analysis. But if I'm using my technical analysis, I would look to buy off the 78.6. But if I'm looking at some of these candlestick formations, I get let me zoom in a little bit tighter here in particular. This 61 level that it broke down behind underneath, these fibs act as support and resistance levels as well. And we can see when the market came back up to retest it, it couldn't break through, came back again, couldn't break through. And then we got a confirmation on the sell side. So I know at least it's going to go back down to 78.6. Now, if I'm trading that oscillator, this moving average oscillator at 55, I can be looking to sell because we're below the oscillator. And so I could go either direction as long as I really have my risk defined. That kind of answer your question, or kind of? Okay. Yep. I'll go back years. Okay. Nope. Look at this right here. So this is Euro USD on a monthly chart. So Euro USD going all the way back to 1999, 2000, 2001. If I want to, and the higher the time frame they're looking at, the more stable your technical analysis tools are. So if I drew my fib from high to low, or from low to high up here, you can see right in here when it hit the 50 retracement level, it bounced right off 50. It bounced right off 50 again twice. Let's see where we're at now. Scrolling across. So we broke down below the 61, was holding very, very strong. So it broke down below 61, was trying to get back above it and struggled until we finally broke back above it here. So yeah, it doesn't matter how far you go back because the technicals will still show up. If you start seeing price action get close to a level that it was years and years ago, it's definitely a good level to start looking to trade at. Even here, we're trying to approach this 50 from the downside. We can look for it to sell off. Let's kind of get rid of that. And then here's moving average. And let me throw a 200-day moving average on here real quick. Let's see what the 200-day looks like. Okay. So anybody that trades the moving averages, once they saw this break below the moving average, just treat those just like support resistance levels. That person would have been selling off the monthly chart and kind of ride this down and staying in this trade as long as this stays on the downside. So we're getting close to, we're actually right back at it. So way back here, what is this, June 2010? Yeah, June 2010, this last low that we had, we're approaching that again from the opposite side now, or we've retested it and we're failing at it. So if you're looking at a more long-term trade, this would be a nice setup for a nice long-term sell going back years. And then this is it's also a good example of the other one we just looked at too. So that's one way to look at it, because we're approaching previous resistance from this downside. And then you might have somebody looking at this saying, hey, we broke out of a higher high back here. We had this little zone. Get rid of this one. I don't want to confuse it. We had this last high back here. And we broke out above it. So maybe now we're going to keep pushing higher. So this will be our support level. Now we'll keep pushing higher since we broke out of a high from August 2015 or 14. So that person's going to put their stop loss just below here. And the person that's selling is going to put their stop loss just below that top level we had. So it's all about defining that risk up front. Somebody's going to be right, somebody's going to be wrong. But if you want to take both sides of the trades, you could definitely do it too. Because we have those technicals aren't going to lie to us, because we know exactly where the support resistance levels are. And then here's a weekly chart here. We kind of broke out of the 200-day on the wider time frames. If you want to use moving averages, look at the 100 days and the 200 days. The 55s are good too, but the 100 and 200 are long overalls. So this 200-day on a weekly chart, I wouldn't be surprised if we keep pushing up here, going back up in price on this Euro USD. All right, so let me grab 4. All right, so we're gonna go down to oscillators and moving average oscillator. So if I throw that on here, it'll say fast EMA, slow EMA. So these are going to be the colors. It's been a while since I used it on here. I don't know which color is which. Yeah, I don't like it on here. I thought it should. Let me see if the trend one shows what I want. Okay, that's the one I want. So it's under trend and moving average. That'll be the one you want. So let me clear this up real quick and redo it for you. Get rid of this extra stuff here. Here, but it's all right. So under indicators, we have trend and then moving average. Click and drag, and then the period. You can change that to 55, 100, or 200. Just leave it as simple. I'll kind of go over simple and exponential during another session, because just like any other thing, you can kind of definitely play with this as well, depending on what kind of fits the strategy. So we'll put it at 200-day and hit OK, and then it'll draw that yellow line on there. So the bigger overall time frames, you know, those are nice to keep on there. I just don't like a lot of stuff on my chart, so I always take it off and kind of just throw it on there when I'm kind of just looking at something. But the 200-day is nice to look at because wherever you can see it, it acts like support and resistance here. And then as we broke back through it too, we had these large wick candles on the sell side of it. So we had nice rejection. Then we kind of sold off on it on the 200-day moving average. So, and then you can definitely draw multiple ones on there too. Moving average, change it to 100, and make that. Let's make it bright green. It's not really easy to see. Make it blue. And you can see the 100-day moving average holds a support here, holds a support all the way up here. Had a nice solid breakthrough here, stopped right at it, then moved straight up above it. 200-day moving average, active support, nice big wick off of here, nice buy signal off of there. So you can see how the moving averages definitely act as that too. Then especially when you start consolidating real close to each other, those are good signals as well. Those are real good signals. But yeah, 100 and 200 for your daily and your weeklies, 55 if you're looking at some of the smaller time frames. So let me clear this up. Stochastics. Moving average 55. Go down to like an hourly time frame. A lot of traffic right in here, holding. Chart looks ugly. And this is kind of where that back testing comes in. So if I'm looking at a 55 here, it doesn't hold as well as I like to on this particular AUD CHF. So I probably wouldn't use this trading style on it that often. So you'll notice some charts, maybe Euro USD might look a little bit better, and you start seeing that oscillator really holding, then you kind of look at that. My buddy Jay, he always talks about marrying a currency pair. So you'll definitely see it when you back test it, how solid it is when you back test years using certain little tools and fibs and stuff like that, and versus some of these oscillators. The AUD CHF, I wouldn't even use the oscillator for this because it doesn't hold more times than not. So I would look at something different if I was trading this one. But the 100-day and the 200-day are nice. The 55 for this pair isn't that pretty. Let's see if we can find another little setup that's happening real quick. Time moves fast. Yeah, I like to show people both ways to look at the market. As long as you can define your risk, that's the biggest part. Let's look at this. Let's look at this failure one real quick because you got to show the good and the bad. All right, so I'm looking at AUD NZD on the 1 hour. So it had our entry from 109.65 to 109.04. So we had about a 60 pip risk on here. And I want to see if I can just find a way to reduce risk if we were kind of taking this. AUD NZD. Because when we lose, we want to lose small. That is the key to keeping an account. So let me start on the 4 hour, see what the 4 hour looks like. All right. So, okay. So we had this nice big thrust up. This actually might be easier. Looking at it. All right. So if I draw fibs, because I like trading fibs, had a nice big move up. I would look for some fibs to start buying off of. None of these. The only decent buy I would have had was probably around here in the 61. where it went up a little bit, but one of the ones you got to kind of get out the trade if it's just not moving up. And then we failed 61 and kind of played in the zone for a while. So this would have messed me up. I know it would have, because I would nice thrust up. I want a nice big push off of it. So moving stop losses, we'll get into some strategies on that too, because sometimes once you're in that 20, 30 pip profit, move that stop loss to a couple pips above break even. So even if that trade ultimately fails, you don't lose anything. It's kind of what they call a free trade. Looking at, let me draw the little levels on here, what the scanner was telling us real quick. So scanner entry price was 109.65 and 109.29 and stop loss was 109.04. Change that to red or something. All right, so those two yellows were our entry on the scanner, and the red was our stop loss on the scanner. And let me go down to the hourly, since that's what we're looking at. So here's one. This was more of an easier one to kind of play with. So the yellow is kind of the range that they were giving us as that entry. Now, same time we're looking at that range, we can look back at the lowest low, which is just support. Let me change that over to like blue or something, so it's not too confusing. So the last low we had was 104, 109.45. So this is kind of one of those things. I can't remember if it was you or Stacy. If that top side of the zone says to get in at the top side of that zone, that first entry, I like to use that second entry as my stop loss. So instead of getting in here at that first yellow and the stop loss way down here, we could have saved ourselves about 30 pips almost just by using the second entry as our stop loss level. And then we had, if we were in front of our chart at the time of this 1 hour, we see that this candlestick just dropped right through our last support level, which is this blue line, this teal line. So when you had a nice solid break through this is just an indication to get out this trade, because I mean that's just a nice bearish sell signal. And then it ended up hitting that stop loss anyway. But so you have to wait till this candle have closed. But if you had got in on that first entry and then seen this thing just rapidly push through here, we could have saved ourselves a few pips. Let's see. And then the other person that's a pattern trader, they might have seen this setup here. Let's see here. That upside down flag pattern where you had nice down push, and then you have this flag set up here. So it's just the opposite. You have a downward momentum, then you start consolidating, and then once you have a break of the actual pattern, then you're looking to get on the sell side and start riding it on the sell side. So it's one of those things, again, I just keep saying it's whatever you kind of see the majority of, that's the way you kind of go. As a fib trader, I probably would have lost this trade. If I was looking more at the pattern, then I would probably won this trade, because I would have seen this developing back here. So it's just like a game of chess. If you can start to see the pattern as it's forming, you're really just waiting for the breakout of it. Once the breakout happens, looking to go in that direction. Any questions on that? Okay. All All right, but yeah, if you have anything during the week, definitely shoot them over to me. If there's something you want me to kind of look at, and I'll definitely take a look at them because I know this scanners happen in real time. So I'll shoot these guys a message in the group to see if anybody else is seeing what I'm seeing on the with yours and the other two. Okay. All righty, Angelica. I will see you. No problem. All righty.